Good evening, friends. Myself, Karan Bhojwani, Executive Editor, PP at DIS Research, welcoming each and every one of you on behalf of Dalal Street Investment Journal in our webinar for this month. So, the topic for webinar is August Market Outlook and Key Sector to Watch Out. So, why it is important to know the market outlook and which sector is likely to be in focus? Why it is important to understand that in this webinar? The reason is that in the month of July and the second half of June also we saw that market was moving in a pendulum, moving like a pendulum from one side to another end. So basically, it for the majority part of July month plus in the second half of the June month, it traded within a range. So basically, the overnight news or the statements from the US President Donald Trump and the activity in the West Asia dominated the headlines. Based on that, market moved. But in last couple of trading sessions, we saw a good rally in the market. So now we need to know whether the market would continue this rally, and if yes, which is the key sector to watch out. So this would be the topic of our presentation. We will be starting in next couple of minutes. We are waiting for participation to join in this presentation for webinar. So before starting the presentation, this is a standard disclaimer. DSIJ Wealth Advisory Private Limited, formerly known as DSIJ Private Limited, research analyst and investment advisor, is a regulated entity by the Security and Exchange Board of India, which is SEBI. Investment in securities market is subject to market risk. Read all the related documents carefully before investing. The securities quoted are for illustration purposes only and are not in any kind of recommendation or recommendatory in nature. Registration granted by SEBI, enlistment with BSc and certificate from NISM is no way guarantee performance of the intermediary or provide any assurance of returns to the investors. So this is the standard disclaimer. So whatever example we take in this presentation, if it is just for a reference purpose only, don't take it as an investment advice or trading advice. It is just for your understanding purposes. So we will start with the presentation and webinar. So again, the topic, market outlook and key sector to watch out. So just like I mentioned earlier, for the majority part of July, market moved within a range based on the news flow coming in. If the crude prices fell down, so the market rose subsequently. If there was some statement by US President Donald Trump with related to escalation of war, crude prices shot up and the market saw profit booking or saw some correction. But in the last three trading session, we saw a very good rally of 1.5%, and basically we almost closed about the 200-day exponential moving average on the Nifty, and also we closed about the prior swing high. So now it is a key question to answer whether this momentum is likely to continue, and if yes, which sector is the key sector to watch out. So basically, this webinar is divided into three parts. First would be the market outlook and key indicators, which are to be tracked, and based on that key indicators, market is likely to see the movement. So you will have a good perspective, a complete perspective of all the things, how to look into the Nifty from a pattern on price structure, and plus other factors which impact the movement of the Nifty. And again, we will see how usually the month of August behaves for Nifty, and how does Nifty behave in the month of August particularly. We will have a data of 10 to 15 years, and we will study that and understand what is the average return in the month of August. Then we will move to the second segment, which is market breadth. Market breadth is very important to understand whether the breadth is improving or not, and how the breadth is helping us to make a good amount of money selectively. Third, which is the key point of this webinar, key sector to watch out or to keep on the focus with a proper rationale. We will help you understand the price structure along with some other factors which are helping this sector to be in the focus. So we will begin the presentation with the first point of market outlook and key indicators. So before moving to the outlook, this is a last 1 month comparative analysis of Nifty 50 index, which is the frontline index of Indian market NSE, along with the Dow Jones, S&P 500, Nasdaq, Shanghai, Nikkei, and Kospi. So all these indices were outperforming the Nifty 50 index prior to this period. However, in the last 1 month, we have seen significantly outperformance, relatively outperformance from the Nifty 50 index. When we compare with all these index, you can see that Nifty 50 index comparatively in the last 1 month has given 2.8% positive return, whereas all other index which we have plotted on the graph had delivered negative returns. So these index were the top of the down, especially Kospi and Nasdaq, which are related to semiconductor and AI stocks. These stocks saw and the markets, these markets saw significant amount of rally, a very decent rally in the short period of time. But at that period, Nifty again was struggling because of some macro headwinds, like crude oil was trading at $100 and about $100. Rupee was under pressure. But now in the last 1 month, when the things are trying to stabilize, Nifty has put a step forward and relatively outperformed these all indices. So as far as Nifty 50 is compared to the global market, these three indices on the 1 month basis, in the last 1 month, comparative analysis shows that index Nifty 50 index has outperformed. This relatively outperformed these indices. Moving ahead, we will see the technical structure of Nifty. So this is the daily chart of Nifty 50 index. We can see that in this chart, which is plotted over here, from the April 2 lows till April 21 high, Nifty rallied near about 11% in a very short span of time. If you consider almost in 13 to 14 trading session, we saw a very good rally of 11%, which is very significant. But thereafter, what we have seen, the index has been trading within a band of 1500 points. From it is usually trading in the band of 23,100 to 24,600. So over here you can see that the index has been trading in a very broad range of 1500 points. But if you concentrate on the price structure, what we see is a formation of a triangle pattern. So this pattern, as per the textbook, it is known as a ascending triangle pattern. So the formation of an ascending triangle pattern is such that we have a flat horizontal trend line which act as a resistance on the upside. Meanwhile, the index or the stock during the formation of this pattern forms a higher low as compared to the previous low. Over here, you can see that the index formed this low, then this is an higher low, and this is again a higher low. So basically, we are in a formation of ascending triangle pattern where we see the lows are higher as compared to previous low, and we have a flat resistance line marked at the upper band of this triangle pattern. So today what happened? Today index managed to close about the 200-day EMA, exponential moving average, for the first time after the West Asia conflict breakout. So which means almost 4.5 month period has gone by, and this is the first time in the daily chart we are seeing that the index is breaking about 200-day exponential moving average. Along with that, what we are seeing is the fact that the 50 DMA movement, which is the 50 daily moving average, is trending higher now. It was basically very much flat throughout the last 4 to 5 weeks, but now it has started to trend higher, which means the momentum is kicking in. And we can see that after this gap up seen over here, which was formed a couple of trading sessions back, the index has been forming the structure of higher highs and higher lows on a daily basis. Now it has recaptured or reclaimed the 200-day exponential moving average, plus it has also surpassed the previous swing high, which is over here. Now we are trading about this swing high. Now the key thing to watch out is the level of 24,600 on the closing basis. If the index going forward manages to close about the 24,600 mark, along with a good market participation, which is market breadth. So definitely this would be the positive sign, and we can see the structure shifting from a range bound move period to a trending period. So the first sign of trend improvement are currently visible on the charts. For an example, first thing is that we have captured 200-day exponential moving average. Secondly, we have managed to close above the prior swing high, which was registered some time earlier back, and the 50 DMA is starting to trend higher. So some evidence is available, but the confirmation is not available yet. So we will wait for the confirmation, which is 24,600 mark. On the closure of about this level, breakout would this would result into the breakout of this pattern, which would be likely to be positive for the index. Moving ahead, as we discussed earlier, breadth. So this is the breadth of Nifty 50 index. So what we have done, we have plotted two kinds of breadth. One is based on the 50 DMA, which is 50 days moving average, simple moving average, and 200-day simple moving average. These both are the widely followed moving averages. 200-day moving average is used for long-term assessment of the trend. Meanwhile, 50 is used for on a short-term assessment of the trend. Not extreme short-term, but a short-term trend. Extreme short-term, we can use 13 and 20 as well, but for short-term, 50 is very suitable. So last month, as of June, what we saw as per the 50 DMA breadth, 52% of the stocks were trading below the 50 DMA and 24 stocks were trading above the 50 DMA. So 48% of the stocks were trading higher than the 50 DMA. But fast forward to July 31st, the data indicates that 30 stocks, which is 60% of the Nifty 50 stocks, are trading above the 50 DMA, and 40%, which is 20 stocks, are trading below the 50 DMA. So what this suggests is that the fact that the market breadth has improved in the recent months. The month of July, we saw that the market breadth has improved based on the 50 DMA. Similarly, along with the 50 DMA, we have compared data of June 30 with July 30. What we have seen is the 200-day DMA breadth. We have not seen significant change in the breadth, but yes, the breadth is on the positive side. As of June 30, it was even steaming. It was balanced equally, pretty much balanced. 25 stocks were trading above 200 and 25 stocks were trading below the 200 DMA. However, now, as of July 31st, 2026, what we have seen is 26 stocks are now trading above 200 DMA, which is 52% stock. Like I mentioned today, the Nifty has recaptured its reclaimed its 200-day exponential moving average, but it is still below the 200-day simple moving average. So going forward, if Nifty manages to cross above the 24,600 mark, it is likely that it will recapture the 200-day moving average as well, and we can see the breadth will start to improve for the long term, which is 200-day moving average. So this was the comparison of market breadth of Nifty 50 as compared to the June 30 along with the July 31st period. Moving ahead, now comes the seasonality analysis. So for every month of August during each year, we have plotted how the August month has performed. So in 2000, from 2009 till 2025, we have data of almost 16 years. So what we have seen, August has generally been positive. If you can see, the positivity ratio of August is around about 59%. So means out of the 10 instances, the index manages to close in green in almost about 6 times. Out of 10 times, 6 times it manages to close in the green. However, what we have seen is the average return is almost flat. So basically, the reason being that is that usually in the month of August, the drawdowns have been very sharp. 2011, we saw 8.77% sharp fall. 2013, we saw a sharp fall of 4.7%. Similarly, in the month of in the year of 2015 August, we saw a sharp fall of 6.58%. So because of these sharp falls, the data, the average looks quite lackluster. The performance looks quite lackluster. But if you check the recent period after the COVID, we have seen that in 2021, 8%, 8.69% gain, 3.5% 2022. We saw a correction of 2.5% in 2023 to 2024 was positive. 2025 last year in the August month we slipped at around about 1.38%. So this data indicates the possibility that the index may close in green is about 59 to 60%, but the average return is almost flat. So this data does not clearly indicate whether the index has an edge during this month or not, but it just gives an idea that this is a lackluster month based on the average return. So nothing significant. This is just for an understanding purpose. So now the key things to watch out. Now what we have seen, you must have all, every one of you must have read that FIs have been selling continuously in the Indian market. So if you look at this chart, which shows from March, between March to June, we saw a very sharp sell-off from the FIs in the cash market. So net outflow in the month of March was in excess of 1.2 lakh crores, followed by a sharp sell-off in April, which was about 70,000 crores, 55,000 crores in the month of May, and June, what we saw is 49,000 crores of outflow. Now, in the month of July, this is data through 30th of July. So what we have seen, the outflows have significantly reduced. So what we were seeing in the earlier months is like almost 70,000, 55,000, 1.22 lakh crore of sell-off. But this month we have only seen as of 30th July is 6,000 crores of outflow, which is very small in comparison to earlier month. So the sell-off from the FIS is subsidizing what we are seeing in the recent month. And this is an interesting chart to look at. Why? Also, if you have noticed that in the last three trading session, we have seen positive inflows from the FIS. So this is the data we have seen in 28 July around about 755 crores positive, 2900 crore positive 29 July, 30th July 3600 crore positive inflow. So in the last three trading session, what we have seen is US dollar index. This is the daily chart of US dollar index. US dollar index has been falling sharply in the last couple of trading sessions. It has fallen around about 1.6% in the last three trading session, and this fall has resulted in the breakdown of the neckline of the double top pattern along with the 50-day moving average. So for understanding purpose, what is US dollar index? US dollar index basically help us to US dollar index is a currency pegged with the comparison of 6 other currency like major currency euro and yen and other currency. So it is pegged to that, and accordingly these move. So whenever dollar index starts to correct and fall, it is a very good sign for emerging market like India. So historically, what we have seen is the pattern is that dollar index and emerging market tend to have an inverse relation. Over here, we have mentioned that it tend to have an inverse relation. So whenever dollar index sees a fall or slips lower, what we see is that emerging market come into the focus because there is a likelihood that the emerging market might see an inflow from the FIRs, and that we have seen in the recent times that the fall in the US dollar index is accompanied by the net inflows from the FIRs in the last couple of trading sessions, and this is the data. So now we have seen a breakdown on the dollar index chart along with the 50-day moving average breakdown. So double top pattern neckline is breached. So this is positive for the emerging market, especially for India. So now what we saw earlier, that the structure is very good. Seasonality does not show us a significant signal whether this month is going to be good or bad, but definitely shows that the relative returns are very much average returns in the past 16 years is relatively lackluster. But two key factors, which is the flows from FIRs, the outflows have subsidized significantly. Thirdly, US dollar index has seen a breakdown, and recently we have seen a sharp correction. So the breakdown is of double top pattern, and this is a daily chart. And the market breadth also, we saw that the market breadth is improving. It is not completely in the euphoric phase where we see that the 80-90% of the stocks are trading above the 50 DMA, but definitely it has improved slowly and steadily and gradually. So that is a very heartening sign as a. So the key thing to watch out, Brent crude oil. Every now and then we see that the Brent crude oil is higher. We assume that the markets will go lower. So Brent crude oil has hogged the limelight, and it has been the poster boy recently with respect to news. So immediately whenever there is some comment with respect to the devastation crisis, there is a direct impact in the crude oil prices. So how does the chart reflects where does the crude price are headed? So recently we saw that the index, crude oil index, the crude oil prices rallied from the July low, and the rally was sharp and fast. So where exactly this rally halted? The rally halted near the gap area, resistance of the gap. You can see over here there is a gap area, and the Brent crude oil resisted over here. Plus, it was the 61.8% retracement of the complete downfall from the March high to July low. So over there, we saw that the crude oil prices respected the resistance of 61.8% Fibonacci retracement level. Plus, it resisted, just filled the gap, and then it saw the price retreating from that level. Currently, it is below the 50. It is just hovering near about the 50-day moving average. Nothing significant on the patterns as per, but resistance, which was near about 101 level, has been respected, and the prices have fallen sharply. Now, as long as the prices stay over here, it is a very good sign for Indian market. So this is the outlook of crude. Now, what we saw, crude, dollar index, market breadth, and price structure of Nifty 50 index. Structure is good. Flows from FIs are turning positive. Yes, the number is relatively low. What we have seen, the sharp sell-off from them in the last previous month. However, this is a positive sign because dollar index is started to correct, and it is hovering near about 100 mark. So if it is sustaining about below the 100 mark, it is very positive. Crude oil sustaining near about 80-85 level, then again it would be a decent sign. Now coming to the Nifty 500 market breadth, a broader index. So same, just like we did for Nifty 50, now we have moved to the broader index, a much broader index, which is Nifty 500. Again, we have used two components, 200-day daily moving average, 50-day moving average as a breadth parameter or benchmark. So as of June 30, 2026, what we saw, near about 53% stocks were trading above the 200-day moving average. Meanwhile, 47% of the stocks were trading below the 200-day moving average. Now the breadth improved. As of July 31, 2026, 57% of the stocks are trading above the long-term moving average, which is 200-day daily moving average. Similarly, 43 on the other hand, 43% of the stocks were trading below the 200-day moving average. Now over here, you can see that long-term structure of Nifty 500 components is starting to tilt or head towards a positive terrain with an extreme development. From 53%, now we have moved to 57% on the breadth side. On the positive breadth side, that these stocks, 57% of the stocks are trading about a 200-day moving average. So again, breadth is improving gradually. It is not improved sharply, but gradually we are seeing improvement because what we have seen in the Nifty 50 index is that the index has been trading in that 1500 point span. So that's why we have seen that the breadth is improving gradually, not at a significant pace. Meanwhile, how does the short 50 DMA, which is considered as per my analogy is a short-term moving average, how is the breadth of that? So what we see, almost similar breadth. 58% of the stocks were trading about 50 DMA as of June 30, And again, over here, 58% of the stocks are trading above the 50 DMA as if now. So again, the broader index, what we are seeing is that the fact long-term breadth is improved gradually. Meanwhile, the short, which is considered as the 50 DMA breadth, has stayed similar almost. So this is the cue from the Nifty 500 market breadth. So now moving ahead, we understood market breadth, we understood the structure of market, dollar index, FIS inflows, how they are improving, crude oil chart. Now the key sector to watch out, or the key sector to keep on radar. The key sector is Nifty Auto Index. In the month of July, yes, Auto Index has performed exceptionally well, and as a result, it has reached a very crucial level. We will see in that chart where the crucial level is and what is the crucial level and why the how are the other factors supporting this. Quantitative insights are supporting this thing. So again, this is a daily chart on Nifty Auto Index. Daily chart each candle represents the daily price action of Nifty Auto Index. Today we saw that the index has neared a very crucial level. It resembles a cup pattern. So currently price is on the verge of breakout of a cup pattern. So this curve pattern is a very long pattern of nearly about 5 months long, 5.5 months long, and we are seeing that the moving averages, which are 50-20 moving average, both are moving higher along with that. So the price structure price structure of the Nifty Auto Index on the daily chart indicates that the structure is very positive and it is on the verge of a breakout. Cup pattern is clearly visible on the chart, and it is not a short time frame cup pattern. It has been formed over 5.5 months period of time. So this suggests it is a very durable pattern. So we need to watch out for this breakout level, which is around about 28,800, 900 mark. So on sustaining about this level, we will see a breakout of this top pattern on the daily chart. So now moving ahead. So now what we have done a comparative analysis. We have drawn a comparative ratio. Nifty Auto Index is divided by Nifty Total Market Index. So what is Nifty Total Market Index? So the Nifty Total Market Index tracks the performance of 750 stocks. It is more wider and broader than the Nifty 500 index, covering large, mid, and small and micro cap segments stocks. So basically, what we have done, this is basically a ratio chart, which is a ratio which is right from dividing Nifty Auto by Nifty Total Market Index. We have taken a much broader index, and not Nifty 500 index, but in fact Nifty Total Market Index. And what we are seeing is that over here we have seen that the cup formation is already taken place. Along with that, we are seeing that the ratio comparative chart, relative strength comparative chart is nearing a crucial breakout of rectangle pattern. Over here you can see it has taken multiple times supports over here. Now it is on the verge of a breakout. If this ratio chart breaks out, this would be a very positive sign. It will indicate that the Nifty Auto Index is relatively outperforming the Nifty Total Market Index. So this component is key because we are not just relying on the price structure, we are also seeing that how the Nifty Auto Index in comparison with the Nifty Total Market Index stands, and whether that ratio is also moving along with the price structure, and it is visible that along with the curve pattern breakout, we are on the verge of seeing a breakout of the ratio chart also. So this is a combination of two things which suggest a very good price structure along with the ratio breakout. Now coming to the market breadth of Nifty Auto Index. So again, we have used a benchmark of 50 DMA. So there are 15 stocks in Nifty Auto Index. 47% of the stocks were trading above the 50 DMA as of June 30th, 2026. However, as of July 31st, 2026, what we are seeing is a significant improvement in the market breadth. 87% of the stocks are now trading above the 50 DMA. Only a couple of stocks are trading below that, this key moving average. This clearly suggests the momentum is high and the momentum can lead to the breakout of the Nifty Auto Index, which we have seen in the earlier slide. So the momentum is high, breadth is improved significantly. So now this is the Nifty Auto seasonality analysis. What we are seeing is that since 2012 up to 2025, we have seen 8 positive months for Nifty Auto Index in the month of August and 6 negative months. So that means August out of 14 instances, 8 instances, Nifty Auto Index has closed in green in the past. And the average written for the month of August for Nifty Auto Index has been 1.63%. So this is again suggests a favorable outcome for the Nifty Auto Index. 57% of the times Nifty Auto Index has closed in the green terrain in the month of August. So this is the data. Weak months were 2015 and 2017, and the best performing months were 2014 and 2020, which is 7.70. So this data, seasonality data, also indicates that the tilt is on the bias positive side. The bias is on the positive side because the average return is relatively good, 1.63%, and the odds of closing in green is also higher. Not significantly, but it is decently higher. So now this is a quantitative study which we use for analyzing which sector is seeing a good amount of momentum. What we have done, we have taken all the components of Nifty Auto Index, which are about 15 stocks. What we have done is we have run a daily RSI. If the RSI is above 60, the stock is showing good momentum. Basically, if the RSI is above 60, it usually means that the stock is showing more gains than the more average losses in the last 14 period. 14 period is the default period. So we have done daily, weekly, both the things. RSI has been used. ADX, which is the trend strength indicator. It basically denotes whether the underlying security or the stock is in a trending mode or not. If the ADX is about 25, it suggests that the trend is very strong. Plus, we have used DI plus DI indicator, directional index, positive directional index. So this indicates whether the index is the trend strength of the index is supported by along with the positive DI, which is the bullish bias. So this is the daily RSI. This is the weekly RSI above 60. This is the daily ADX above 25. This is the daily positive DI about 25. This is the weekly ADX about 25, and this is the weekly ADX DI about 25. So now over here you can see on the daily chart, 11 stocks out of 15 are showing positive momentum. That is RSI is above 60. Now the weekly shows that 9 stocks are trading above the 60 RSI, which is again a very positive thing. So this clearly suggests momentum is strong in this sector stock. And now the trend strength. How is the trend strength? Daily chart clearly suggests out of 15 stocks, 8 stocks are seeing ADX above 25 and 11 stocks have DI, which is positive DI, bullish bias above 25 is 11 stock. So daily is very again momentum is strong. On weekly, what we are seeing, 6 stocks are having an ADX above 25. So means on the higher time frame, 6 stocks have already established a strong trend and few will follow. Not the complete basket has seen the ADX on the weekly chart about 25. But yes, DI, positive DI, which is the positive bias, positive momentum on the weekly chart is higher about 25 for 10 stocks. So this again shows that the stocks components of Nifty Auto Index have very good momentum based on RSI, ADX and positive DI. So as I mentioned, 11 out of 15 stocks have daily RSI reading about 60, showing broad short-term momentum across the Nifty Auto Index. 9 stocks remain above 60 on the weekly RSI, indicating that the momentum is also visible accompanied by the higher time frame. Daily positive DI strength, which is bullish bias, is present in 11 stocks, but only 8 stocks have ADX above 25, suggesting that the positive directional strength is broader than the confirmed trend strength. That means ADX represents the strength of the trend. Meanwhile, positive DI indicates which side is more, which side has an upper hand. So over here we see that 25 readings, ADX reading of over 25, 8 stock have, but the positive DI reading of over 25, 11 stocks have that. Along with that, on weekly time frame, we saw that 10 stocks have positive DI reading about 25, while only 6 stocks have ADX about 25. That means still the long-term strength, higher time frame strength is about to develop in other stocks. Right now, only 6 stocks out of 15 have a strong strength. But on the lower time frame, we have already got the cues that most of the stocks are in a great momentum. So now over here, what we can see that the structure of the index looks good. Price structure is clearly favorable. Again, what we have seen in the earlier slide, if the crude oil prices stay soft or does not see any spike, auto stocks would directly be benefited. Secondly, what we are seeing over here is that the momentum based on the RSI, ATX, and positive DI is currently tilted to the positive side, and market breadth is also indicating that the momentum has seen a drastic shift in the market breadth as well. So in the month of August, we are anticipating that Nifty Auto Index should be on your radar because it is showing a very good structure. Now the thing is that whether it consolidates and then break out or it directly breakouts and see a good momentum, only time will tell. So this was with respect to seasonality, momentum. So everything we have seen. Now here is a very good thing for all the participants, which is called as a special bonus for all of you. There is a scheme of 15% flat off for all the attendees. Only for attendees who have attended this webinar can opt for 15% discount on a very special product which is known as Tiny Treasure, which is powered by our research team. Monthly one recommendation, and you can get 15% flat off by applying this coupon TINY15, Tiny 115. And this product is basically a recommendation provided in small cap space. We look for a up move about 30% to 40% gains, and every month one recommendation is being provided. So in a year you will get 12 recommendation, and if you opt for this offer, you will get 15% flat off. And this is only especially for all the attendees who have attended this particular webinar. So Tiny Treasure. If you are a small cap investor, you are looking for investment in the growth stocks, then definitely you can look to this product because the cherry on the top is that you are getting a 15% flat off today. And this is valid for 2 days, means it is valid up to August 2nd. The coupon code is valid up to August 2nd, Tiny 15, TINY15. So note it down, especially for investors who are interested in investing in small cap strategy or who are small cap stocks basically, and investor who wanted to start investing journey by investing in small cap stock segment, then you can opt for this product, and the coupon code is TINY15, TINY15. Every month one recommendation would be provided. So DSIJ is available on majority of the platforms, social media platforms. These are the handles: dsij.in on the Facebook, at the rate on Instagram. You can follow us on at the rate Dalal Street Investment IVNJML, and on YouTube Dalal Street Investment Journal, on Telegram DSIJ_Telegram, on LinkedIn Dalal Street Investment Journal, and on WhatsApp at the rate Dalal Street Investment Journal DSIJ. So these are all our handles. You can follow us or join us for all the updates with respect to market, because we keep posting each and every update of the market in all these platforms. So lastly, thank you everyone for participating in this webinar. Now the forum is open for Q&A. If you have any questions or if you have any suggestion, feedbacks, you can drop it into the chat box or on Q&A segment. I would reply to it. You guys can share your feedback also. How did you like this session? Did you learn something new? How to analyze all the things together and put it into a perspective? Also, if you have any particular question, you can post it on the chat box. Come on, guys, post your question. if you have any questions. So seems there's no question to be asked. So the summary is that to summarize, Nifty price structure look constructive and it is on the edge or on the verge of breaking of a triangle pattern. And usually, historically, we have seen that when such patterns break out on the positive side, we see a good decent rally. And also we that see that the formation of higher lows indicate that the buying support is available in the market. Secondly, the fall in the dollar index is positive for emerging markets like India, and if it continues to slip below 100 level, would be positive for India, and we are seeing that impact in the flows of FIs as well because they have done net bias in the last three trading session because of the sharp fall and the improvement in the sentiments because India was considered as an anti-AI theme. So now AI stocks have started to AI semiconductor stocks have started to correct significantly. We are seeing some flows coming in back to India. So along with that, we saw that crude is hovering near about 50 DMA support, and after a sharp move, it is trying to stabilize somewhere near about 50 DMA. And the final thing is that which index to watch out is the auto index. Based on again a price structure and relative comparison study, we have done that the ratio is about to break out along with the price pattern. So the overall structure of index is positive, the sector structure is positive, and these stocks should be on the radar of the auto index. So any other question and you would like to ask? I hope the summary was good enough in few lines. So thank you everyone for joining in. Don't forget that this special offer of 15% off is only for the participants who have attended this webinar. So do if you wish to invest in or looking forward for some recommendation in small cap stocks, Tiny Treasure is to look forward with 15% flat off. Thank you once again for participating in this webinar. Have a great weekend ahead. See you soon. Bye.